morning and welcome to Trading with Larry. It's Larry Benedict, joined by my partner in crime, Eric Shamalov. Good morning, all. Interesting market yesterday for sure. A couple of weird things happened during the day. I think there was an error trade in the bond market, took yields all the way back up to 428 before the auction. People were like looking around, really had no market impact. And when you're in a bubble like we're in now, nothing is really going to affect the market. Interestingly enough, last night after the close, Trump put on another taco, 100% tariffs on all chips coming in to the United States, all chips. Market reacted, barely moved, went down like a quarter of what it was up on the day. And then he tacoed immediately and said, if you tell us you're going to build the plant here, you can sell as many chips as you want from out of the United States. So, that was a little bit of action. Again, what that does for the market is it gets a new short base in the market because everybody sold in the hole and now they got to run in and cover it. Interesting tape. S&P up 40. The Nasdaq up 180 after being up 400 yesterday. So it's up 600 in the last 2 days, and the S&P is up, a cool 100. So if we recap, the week, Friday of last week, we had the sell-off of 100. We recovered almost all the 100 on Monday. Then on Tuesday, we opened up and failed and almost gave back the whole 100. We were down about 60 or 50 on the lows, and then we came back. And then yesterday we rallied up, and now we're back at all-time new fresh highs. So, I'll throw it to you in a second. But again, like I always have these thoughts, and maybe it's the old trader in me. Like a opening like this, it just is. It looks so weird off of no real news to be up like this following yesterday. But again, I'm a little leery because they caught a short base off that fake news headline. So I'm being a little bit cautious in here. And bond market is bid into the auction. I wanted to buy bonds. I talked about it yesterday. I didn't do it. I was kind of sidetracked with, other trading. So, we weren't able to take advantage of that. And, currencies are sitting sort of on the highs of the move, low dollar move. Again, I want to talk a little bit about that. In gold, chopped around yesterday, is trading higher end of the range, and, oil's back to 65. And those are the macro picture that I look at. Equities are obviously extending. There's not a lot of sellers in the marketplace, but again, sellers live lower, and buyers live higher. So right now, you're seeing the buyers in the tape, and I would say the S&P. I mean, I can't even say the number because it's so crazy. 6,400. I mean, that's, we're blowing through, hundreds like it's water. But, what I want people out there to understand is you're trading. You're muted, Eric. You're muted. So I can't hear you if you're trying to talk. So
I was just going, thank you for that. I was just going to interject and say economists had a 6,600 target on the S&P at the beginning of the year.
who did?
So a few of them, a bunch of them.
I don't know, dude. They all lowered their targets into the low 5,000s when we were at 4,800. Okay, so everybody lowered targets in April, and then they've raised them back up to where whatever. So, I mean, this move is epic. It is pretty incredible. You know, again, no matter where anybody's stock goes, they're not going to sell today. So there'll be no real selling unless we turn today and start trending, towards the negative. But what I
You
want to,
really think you really think we're not going to have any selling today? I
I,
mean, the market is up again over. I understand it's a positive reaction.
Eric,
I guess
here's the thing, and I was talking about it and asking you a question before, okay, where you couldn't respond, but here's the thought, okay? Like you're saying bank on crazy, and this market to me is the least crazy market I've ever seen. Like we're blowing up to the upside 40 handles, that's 50 basis points. We're up 50 basis points. That's like not a lot. I mean, it's a lot because we do it every day, but that's what's gone on in the market. You get 30 basis points here. You haven't had it. Dude, if you had a 2% move, I mean, that would be 140 handles almost. I mean, that's the setup is setting up for something really bad to happen, in the sense, not bad because we'll come in from whatever level, but when we come in, it's going to be 300 points, 250 points, which in a day will be only be 3%. So as we keep going higher, like I want to remind everybody who's trading the S&P and not, trading equities, you're trading a 64 $100 stock. The biggest of the big is, other than Berkshire, is like, Meta at $700. So this is 10 times the size of Meta. So it's really a $38 move. Let's take a zero off. Okay. So if you have a $600 stock, this is only a $3 move. That's like nothing. I mean, these stocks are moving 10 times more than that. And if take another zero off, you got a 30-cent move. So if you're trading a $60 stock, this is a 30-cent move. So just keep that in mind, that these moves are big, but they're not huge. Like you got to equate it in percentages, not in points. And as we go higher, 50 points means less and less and less, to be honest. So, you know, that's that's what I see. So I do think the market obviously is grinding higher. I would like to see some type of, you know pullback to be sellable. I think we will see that, shortly. I don't know if it's going to be today, but it's interesting. I'm very bearish, obviously, as everyone knows. And, I don't look right in any way, but like in my positions today, like my max loss on my spreads, and that's the important thing, you always do spreads, is so little today relative to the amount of money that I'm running, that it's not even impactful to my trading today. Obviously, I want to make money, but we're, you know, with all the stocks that we have against our short index, we're potentially going to be up money, and I'm bearish. So, the index is moving, but not moving that crazy. I mean, how easy do you think it is to take out 30 points in the S&P? It's pretty easy. I mean, I wouldn't think it's that hard to do, no?
I don't know. I think we may do that today. I don't know why you don't think we're going to sell. The up move was overnight on another tariff headline, and every single tariff headline we saw
What
has reversed.
what are you talking about? It wasn't, I don't think it's a tariff headline. I think what happened is everybody sold the whole, freaked out, okay? And then they jammed the market up. Dude, we were up right out of the
Right,
gate. Right out of the
because
gate.
of tariff headlines,
Tariff of who? Of what? What was the
chips.
Oh, what do you mean? That was a fake headline. That's
But the market was reacting to it pretty good.
I don't know, Eric. If they put a 100% tariff on chips, we would be down like limit. I mean, come on, that would mean no one could sell a chip.
But he threw in the taco. You said that, and the
Of
market
course,
liked that.
but you're saying we're up today because of tariffs. I don't know.
Yeah, because of a tariff related headline. Yeah.
Well, it's right. Well, what happens is the headline comes out. It's read as negative by algos and whatever. Everyone sells, and then they have to buy it back. they have to run in and buy it back. So, that's where we're, at. And the reason why we're up 37 is because of that. If we didn't have that, we'd probably be up 10, maybe, off of what I'm seeing outside in the real world. The market that's crazed is the DAX is just, DAX came. It's funny. DAX came in like 1,000 points and it rallied 1,000. It like went down 1,000 straight and then up 1,000. So it's back on the highs or near the highs. But my real question is, how is the Fed going to cut? I know they are for whatever reason, or how are they going to cut rates? The BOE cut rates today, a quarter, which isn't, it was expected, but they're trying to thread the needle. All these countries are cutting. Why are they cutting? Are we slowing that fast? Like, I'm trying to understand why everybody's cutting and why we're cutting. Is it
That's the mantra. The market flipped to from thinking there would be no cuts last Wednesday, and then that flipped on Friday with a weak jobs report, got exacerbated by a weak PMI earlier this week. So that's the new mantra. Yeah, they think there's a slowdown, but the market's rallying because they think rate cut isn't the bag.
You think they're rallying because of a quarter point rate cut? Okay.
Yes.
Okay. Well, let's talk about the fact that they were supposed to be 4 by this point in the year. So why would that be bullish? Why did we not sell off? Because they weren't cutting rates when they were.
No, in the short term, I mean, you know how they operate. They'll latch on to the new narrative, which is being developed. That hey, we're going to get that September cut, and they'll forget about it in a couple of days and shift to something else.
Yeah, but they don't even know 100. It hasn't happened, then they don't know. And it's a quarter point and it's one move and it's not even coming for a month and a half. It's like mid-September, right? So, you know, I don't know how that's ripping the market now, a quarter point after we're exploding left and right every single day. So I don't know. They had that quarter point in Friday. How come we sold off on Friday? They were cutting rates, right? I'm
What
asking you.
happened? I understand.
Friday,
So
the
that's
bonds rallied huge and we sold off. The biggest sell off we've had since April. So how is Fed cutting? Oh, on Monday morning they changed the narrative and go the Fed's cutting rates. That's bullish. But on Friday, when bond rallied 2 points, it had its biggest up day of the year. We sold off. So I don't get it. You know, I don't get it. So, listen, headlines are all excuses. It is what it is. They are going to cut rates. Do we know if it's the right move? Who knows? What if these inflation numbers are a little hotter this coming?
right. So I think that's where the market is going to run into a wall if we start to get that. I think we will.
I don't.
Um,
I don't think that at all. I think these numbers are rigged up. They're not going to show anything. Okay, listen. The guy running the country is telling you all the numbers are rigged. Okay, and he fired the head of the BLS because of that. So why would they put out a bad number right now? They could put out any number they want. You know, just is what it is.
do you really think we're going to get the September? I mean, it's a 95% probability according to the market, but can you imagine what would happen if we don't get that?
Yeah. What? The quarter point?
Yeah, yeah.
I think it's irrelevant.
I don't
Irrelevant.
know. I got short bonds yesterday after that auction.
Do not like that. Do not like that trade.
No, you don't. No, you don't.
I actually like bonds. I'm mad that I missed them, and I think they're going to run down to
But
4%.
you buying bonds here, isn't that like like buying the high. I mean,
Why is it
they've
buying?
rallied.
Why would that be
They've been.
buying the high if it goes higher? It's only buying the high if this is the high. How would you know? What if yields go to 4%? Then I didn't buy the high, right? I mean, the trade hasn't even taken place yet. I don't. I appreciate you telling me I'm buying the highs, but I don't know how that's possible.
You usually like that reversion trade. This is a momentum trade for
No,
you.
I like. No, I mean, I was looking to get the pullback at 4.25. It's not really a great pullback, but
Like yesterday, you told me to buy Coinbase. I actually listened to you, so and I actually bought it. Coming
dude,
from a
no,
bear like
wait a
you,
second. Hey,
when
hey,
a
Thomas,
bear like
hit the bid in Coinbase. No, I'm only kidding. But, you're in Coinbase with me now? Great.
I am, and you know why I got in? I was
Kidding.
like, if a bear like you actually wants to buy something, I better be buying it.
What do you mean? That fits right into what I do. What is a bear? That
Exactly. That fits right into what you do.
exactly. I'm a
You're
mean reversion guy.
a
It
mean
should
reversion
work.
guy. That bond trade, that's not a mean reversion trade.
No, because I have it. That's a different trade for me. So I trade a lot of mean reversion, trend within a trend. If stuff is in an uptrend and it pulls back significantly, like Coinbase, which was ridiculous, that it pulled back 150 points in a week. I'm looking to make a mean reversion in a trade like this. Bonds is a totally different trade. Bonds, I see upside because I think that the economy is slowing significantly. And you're looking at it like cutting rates is so bullish. To me, cutting rates is the opposite. I think they're, as Trump calls them, too late, pal. Pal is way too late. Okay. The economy is slowing significantly, and him cutting a quarter point doesn't do anything, doesn't even help. It's so slow. Maybe he'll do a half. I doubt it, but that would make an impact. Doing what he's doing now is making no impact on the market, zero. So to be frank, I don't think the cut is so bullish because really there's an underlying theme across the world right now of slower growth, and the feds or central bankers across the world are a little bit afraid. Why are they cutting rates with the stock market exploding? Why? It doesn't make sense. It doesn't make sense. It's actually the opposite of what you think you would see. But I think that they're extremely worried that growth is significantly worse than what it's showing on the surface. So maybe the rate cut, when they do it, is bad because maybe they're too late to the party. Maybe they're going to have to deal with tariff inflation. Okay, inflation's coming from tariffs, which really hasn't hit the market yet because right now, um, the bottom line is right now everything looks fine. I'm just curious to understand like what you think they're looking at. Like I'm just not getting it. So we'll have to wait and see how I think it's way too early to have the market rallying every single day off a Fed rate cut that's not coming for a month, literal month and a half. Month and a half. There's no meeting at the beginning. They move the meetings around. So this is the period where there's a long time between the Fed. Okay, so we got a long time here, and I don't think I don't think you can trade the market every day of whether the Fed's going to cut or not cut, and if they cut, I mean, you really think they're going to cut a quarter and then cut four more times? Like I don't see it. I mean, I don't even know what is a quarter point going to do. Like that doesn't even move anything. It's not even going to move payments. It's not going to move mortgage payments much. And the funny thing is, if you're worried about like, yeah, on borrowing on credit cards, yeah, you'll get a quarter point less. But like for mortgage rates, that's in the 10-year. That's in the 10 and 30-year, not in Fed funds. So that's not going to affect, that. Um, but yeah, I mean, I think today, and listen, I don't know what you get in bonds, but I think today they have the auction. They'll get them out of the way, and then maybe rally to 415. Or I'm just like, my thought to you is it's hard to do that mean reversion trade in the bonds when it's wound so tight. You're talking about 20 basis points. So, I don't know if you're short bonds because you're looking for a mean reversion. I don't know what you're looking for, you know.
Both higher rates. I don't know. I'm not buying the Fed is going to cut argument yet.
I'm not either, but we have a month and a half to go, so they can argue that for the next month and a half. And there's going to be fits and starts during that month and a half of, hey, this number was strong and that number was weak. And, listen, these inflation numbers could actually come out a little bit, you know, um, showing a little bit more inflation, and it still won't matter. I think the Fed's a done deal, no matter what, no matter what. So, you know, do I think it's right? Absolutely not. I don't think it's right. But I think the Fed is a done deal right now as far as that they're going to make this move unless something out of the box happens. It's like, I mean, one thing about the Federal Reserve, people that are watching, is that they telegraph everything. They try never to surprise the market. And it doesn't have a great impact on the market. And, I'll back it up to when I used to trade on the floor. And this was kind of the craziest thing. The Fed chairman was Paul Volcker, okay, going back into the 80s. And there was massive inflation and rates were double digits and it was crazy. But the Fed didn't even have meetings. Only one man made the rate decision, and it was him. And it would come out interday. You'd be trading, and all of a sudden the Fed would cut rates or raise rates. Then all of a sudden they had to have meetings, and they always had meetings, but they didn't come out. They could come out intermeeting. They used to always come out intermeeting in the 80s. And now it's so telegraphed that they don't want anybody to be surprised about anything. It's almost the opposite of trading Trump. Trump is, full of, I'm not going to, he's full of tacos, where he comes out with an outlandish statement and then within 20 minutes of trading, he takes the statement away. But what he does is he sets a short base in the market and the market gets caught offside off that short base. So, that's what I see with him. And a lot of the reason we're up so much today is because of that, is because people reacted to the headline in a negative way and got aggressive selling, futures. And you called me and said, "Oh, look at Qs. They're down like $2.50, which wasn't even a lot after being up 7."
That lasted like a minute.
Right, but that got everybody short. Nvidia traded down to like 176. Now it's in another stratosphere at basically 182, probably going to 185. Because everybody is short these things now. Because of what happened. They were like, this move's ridiculous. Let's sell these stocks, and they have a short base in them. So you got to be careful with that. As far as me feeling the way I feel, nothing is changing because of a 2% move in the market. Like, everyone's probably like, oh, he's so bearish, this and that. The truth is, literally, from where I'm so bearish, we're up like 1.5%. It's not a big move. I think what's coming is going to be really big. So, I want to be leery. I'm trading opinionated a bit, but remember, I'm not selling like, okay, so there's levels of bearishness as a trader. So the beauty of options is, I talk about it all the time. It's defined risk. You know what you can make and lose depending on if you're doing a spread or just an outright. Okay. But there's different levels. So an option is a derivative product, okay, of something else. The something else, whether that be bonds, S&Ps, individual equities, um, currencies, any of that stuff. That's the, you know, the hard drug. Okay, that's the hard drug. That's the one that's really moving. So, like, if I'm ultra bearish, I'm not going to options really. Okay, I'm going to futures. Okay, because they are moving, as you know, 10 times more, and that's where you get the big move. Then next, you use options. So, like, if I'm bearish, which I am, and I've been doing this kind of the whole way up, I sell spreads. So I sell a call spread out of the money. You know, covers me for 50 basis points. Then I sell a put spread that gets us that iron condor thing that we talk about. Okay. Um, but I'm defined risk. Like today, I came in short. My positions are pretty much at max loss. I'm taking, you know, a six-figure loss on this, but I'm maxed out and some of my other positions are working and I'm not even really down that much money. So by hedging and spreading and knowing your risk, you could be short, take advantage of a down move and and legitimately stay here to play another day. That's why we never sell naked options, okay? Never. It's just not in our, you know, to our subscriber base. We never advise that because, like, let's say you sold calls here naked, you're getting killed, right? So, here we know if we sell a spread at $5, okay, the most we can lose if we're selling a 15-point spread is $10. Then we do something on the other side. We take that loss down to $7 and so on and so on. So, it's important to use options. You know, and then, we've been talking a little bit about this. And I think it's important for people to know the hottest, what the hottest trade in the whole world is right now? No?
Hey, I don't know.
Zero
I
D
don't like I don't like hot trades. I like cold trades.
well, zero DTE. 0 day trades. And today I have a webinar that you could click the link and see, and it's actually using 0 day trades to make money with market divergences that we are coming up with. And the 0 day trading market, we talked about it a lot last week, is the hottest market in the world. And I think and you could think I'm wrong and I'll let you express your feeling, but the reason we're up so much is because they need these 0 day trades to move and work. And there's something in options when people are short, whether I'm short a spread or I'm short outright, there's something called gamma. Okay. So, and then the options become in the money and they become 100 delta. That's what's causing a lot of this move, by the way, Eric, is the fact that options are blowing through the money. Like today, if we happen to sell off 50 handles, the market will get skittish because we're going to go through so many put strikes on the downside that people are going to have to hedge that it exacerbates the move. So, we've come up with, an anomaly with a lot of research to make money in these 0 DTE trades. And, we talked about it, on Monday, the S&P 0 DTE for Friday was off the chart. And next week, it'll be big again this week, but next week is the serial expiration, meaning the original. When we were trading options, when I started my career in the first 25 years, we only had option, or 30 years, we only had option expiration once a month. So this is the serial expiration. You're going to see massive volume next Friday, crazy volume. I think we could set records. So 0 DTE is causing a lot of this move, by the way, a lot of this move.
No,
Options are expiring literally every day on index, and the players are, moving these markets around epically. So, it's an interesting, interesting play right now.
speaking of which, what's your play on 0 DT today? Do
I
you have a play yet? Or you?
No, I mean, I want to buy puts,
I'm
but
just so surprised you're not like trying to sell call spreads right at the open. I mean, you've been doing
But
that a
for our,
lot.
that's a different product.
And
That's
today
our,
you're leery. Today you're leery, right?
I'm not
And
leery.
meanwhile,
I'm not leery of anything. I'm far.
itching to short, and I don't
Why
see you excited about
are you
shorting.
saying I'm very calculated today and I'm very, very focused actually. I've been in my office since 6:45 this morning looking at different things to do, but you're confusing a couple of my products. So, I have a product called the LSP, the S&P spread trader. I think that's what you're talking about, where I sell zero DTE put and call spreads. That is not
Yeah.
this product. This product buys zero DTEs in individual stocks and indexes.
Okay.
So, like today, if we thought the market was going to go, let's say we thought the market was going to go down today, right? We would buy a 0-day put in whatever index we thought would act better, S&P or Q, and then those trades, like our LSP trades, our spread product trades, have a win rate of like 80%. Okay, but the interesting thing about that product is when we lose more than we make. So we got to have a win rate that's above 80%, 75, 80 to really be successful. In the zero
Not only
DTE,
that, you have to bring in enough premium per trade on average to make it worth your while.
well, it depends. I mean, we're just taking what the market's giving, but in the zero DTE long trading product, that win rate, if that win rate is 40%, we're going to the Hall of Fame. Okay. Because these trades don't work a lot. And when they work, you make exponentially, we've had trades that have made 10x in a day, believe it or not. So,
Well, what are you going to do? So here's a situation that I see happening for your new product, and good luck with that. I'm sure you guys are going to kill it with it. What are you going to do when you put on a trade? All right, zero DT. You lined it up. You're going to buy those zero DT puts, and then it starts working like right away. Like, how are you going to? Like, sometimes, like I'll put one of them on, and it'll start working like right away, and you're going to make like a two. You can make 200-300% in like an hour. Like, we've seen that.
absolutely. Absolutely.
So how are you, like, you have to, like, I think you got to get your people ready that, hey, we could take a profit really quick.
I think they're all ready. I mean, they're given a guide. We guide them through exactly how we do it. We give them, the risk parameter. We communicate with the subscribers, and then we give the out, and they have to act on the out. And I think most people know we're in an active trading product, so that trade that trade is a 1-day trade no matter what. That's the beauty. You don't have to watch it for days and days and days. It's a 1-day trading product. But the beauty is we're hand holding everybody and telling them, hey, listen, stay in this a little longer. You're up 45%. You can take profit if you like, but we think there's more in it, etc. But it's the communication factor that we have at the Opportunistic Trader that we're giving to our subscribers, on every trade that we do in every product. So, that's not concerning to me. We've exited these trades in less than an hour, actually, which is
Yeah,
pretty unbelievable. Um, you know,
you're going to
I
have
don't,
that a
I
lot.
don't,
You're
I don't
gonna have
expect
that.
that today. I mean, it's interesting. We have the same thing. So yesterday, I left the office to take care of something. Um, and I thought yesterday I had great positions, and then the market, like it sat during our whole podcast, like it is right now. It's not moving. It's just sitting, 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 sitting. Okay. On the higher end of the band, but it's not really doing anything. So it's, it's what's going to happen now is not indicative of an hour and a half from now. We could sell off, we could rally more, but we're going to move again once the market starts. It's like from 8:30 or 8:45 to 9:30, there's not a lot of market move. in the market. So I've seen that for the last couple of days, and it's interesting. Like Nasdaq is extending highs here, and Nvidia is up, but it's not extending highs at all, which is weird. Um, so most of the Nasdaq stocks are actually ticking slightly lower as we're ticking up. So again, you gotta, I think, the day is not written. You gotta wait a little bit. If the market sells off 20 handles today, which isn't a lot, I'll get more aggressive and get short. If that doesn't happen, we're gonna sit tight. Bond auction today. The problem with the bond auction is the auction yesterday stunk and nobody really cared about it. So, the bottom line is
I cared about it. I shorted bond.
that didn't work. But
Maybe stupidly, but I did again.
why
I'm
you
just short.
being like so like I don't know, like to me, you got a string of auctions. This is the last one, and usually, I've traded bonds for 40 years, okay? And usually when the bond they try to auction the bond low, get it out of the way, and then rip up the bond prices because the dealers are the only one buying this is public and dealers, and the dealers once they take the bond auction, they usually take it up. So, that's what I would say on that. Again, we got to wait to see. Maybe there's some consolidation at the 420 level. I don't think so. Um, I miss the trade, so potentially, unless they back up, I'm going to take a long. Um, it's funny. I looked at TLT, which is a way in equities to express your bond position. I don't know if you're in bond futures or TLT. I don't know what you have, but you know,
Yeah. Interesting.
so TLT is a good way, but the problem is the volatility in bonds is like six. I mean, it's like zero. And the bond volatility is so low that it's unbelievable. So right now, there was nothing really to do. Even if I wanted to buy it, I would have to either outright buy TLT or trade in the futures market, and I really didn't want to do that right now. So again, um, that's really what I see for bonds. I do think they're going to trade a little bit higher, lower yield. I don't know where they go. Um, Interestingly enough, which may help your short cause, is European bonds are not higher, not really higher. So they cut rates and like
Today or in general? Just today you're talking about, right?
yeah, today, Gilt, Schatz, Bund, etc. Slightly flat. Nothing going
What
on.
about the euro? I thought maybe the euro was setting up for a good short yesterday. I
Oh,
took
you gotta.
introductory position in that too.
I listen. I am not happy. We our last euro trade worked. We covered the lows. Then it rallied 2.5 points, and we got shorted again, and now it's up another half a point. Okay, and it doesn't come down. So I don't know. There's something going on. I don't know why. Like Trump is very funny. He wants low oil prices, and I think he wants a weak dollar. I don't know why. I mean, he's like wishy-washy on the dollar. So maybe he wants a weak dollar. I'm not really sure. Um, you know, but we'll see how the bond auction goes today. I don't know if there's anything else you want to cover that I haven't covered. I don't know if there's anything you're looking at.
I'm
You know,
looking. Look, last Monday, Tuesday before the Fed meeting, straddles at the open were like 20 points, right? Like every morning. I'm looking up at the board, over the last week. Every single morning, it's like higher than it was, last Monday, Tuesday, and even before that, like for 2, 3 straight weeks. I mean, you and I were sitting here talking about, laughing about 18, 20 point straddles at the open. Now they're kind of visibly higher. I'm seeing 28s at 9:30. Today it's 25. So,
well,
and yet the
that's a
market is
little 25 to me.
right back.
So
So,
25 to me is disheartening. That's not high. These are not high straddles, dude.
but it's
I'm just
higher. It's higher than it was,
So
right,
what?
in the
We
market.
just had another extension of the up move. It's going to be higher. I mean, listen, the market's up. You're telling me at 28. Think about what you're saying because it's a little crazy. You got a $28 straddle. The SPU is up 41. So basically, they're telling you there's no chance the S&P could go down on the day today. I mean, I don't know. The day hasn't even started yet. I think the thing is way too low. Way too
I
low.
mean, I like to see like relative, uh, on a relative basis. I think it's a data point that I'm looking at. Like, why is that?
But the data point is basically telling me that they're telling you there's no way the market could go down today. You're thinking, oh, we're going to go down. They're literally telling you the market, the S&P will not be up less than 15 handles today. That's freaking crazy. I I don't like that bet. Okay, and then the upside of this bet, looks better to me. The 28 on the upside is the better play. But why? Well, how do they know what's going to happen today? How do they even know? Like they're I think they're so low on everything. It's just my opinion. I think they're so low on everything. Just my opinion. One dumb guy, and his opinion. I think they're too low on everything. Um, Again, we haven't even started the day. You think $28 is a high number? Honestly, I think it's so low. I do. I mean, you don't know what Trump can do today. You don't know any external force that could come into the market. Um, Anything. I just think it's too low. I would not sell the downside of that. I just don't like that. I would sell the upside of that potential. But not the downside of that. That's just me. It's funny. I'm watching Nasdaq like somehow try to rally, and all the stocks I'm looking at are getting worse. Not by a lot, but worse. So I don't know. We're gonna have to get through the opening. Again, if the market comes down to that straddle price of up 20 on the day, I would sell the market to try to think it's going to go negative, but. Right now there's nothing in the market in force that could hurt it. It's just on a path higher. With not a lot of trading. It's interesting. Yesterday's e-mini volume, and I think it's going to be worse today because we're up already, was horrendous. We did a million e-minis. Last Friday we did 2.3 million e-minis. Okay. We did 10 million SPY and SPX options in the day. I mean, these are epic numbers. These are record numbers. And then you come in on today, and we're not even going to do a million e-minis, which is, pretty much lower than the average on the year. So they're buying it up on, not a lot. And we have to see, we'll see how it all plays out, you know. And really, again, you got bond auction. Really, there's not a lot out there. I mean, I don't know if you're seeing anything, macro land that is giving you thought that something can happen here. Right now it just looks.
No, I'm just seeing a market react once again to. I know you don't think it was like headline related. I do, and that me being bullish, I don't like. I would not want to buy right here at all. I'm looking to fade the move today. Hope I'm not wrong, but we have a. And by the way, gold and silver look pretty good, particularly silver. But we have a question from one of your people, and I just wanted to address it. The question is, do we believe, or do I believe rather, when gold in London is down, gold in the USA is up? I think it's an interesting question, especially when what we saw in copper a couple of weeks ago, where like LME copper drops out in London, U.S. copper goes up 20%. and that's just arbitrage. So whenever there's a real attainable price difference that you can take advantage of between European and U.S. gold, that would only I think happen as a result of like a new arbitrage opportunity,
Mhm.
like we saw with copper. But I wouldn't react to that. And gold is like gold is something that every central bank around the world is buying, so it keeps arbitrage to a bare minimum. But I want to share a chart also, because we I don't think we finished that conversation yesterday about what makes gold move and what's the indicator. I think somebody asked yesterday about interest rates and the dollar correlation to gold. I don't like those correlations as much as I like this one. And I was talking about the 210 spread or the yield curve. So the yield curve is down here on the bottom panel in blue, and gold is here on top. If there's any indicator that has correlated in macro better than the yield curve rising, I haven't found one yet. So I think I think that's the best kind of gauge on where gold is going to go next. And the yield curve keeps rising, and those two charts look exactly the same. So that's my take on gold.
All right. I mean, I don't trade. I've never traded gold outside of the
Yapping, you're like eating breakfast. It's perfect.
what?
While I'm yapping, you're eating breakfast. It's
I
perfect.
am. I already ate. Dude, I've been here since I told you 6:45. Okay. I have eaten. I am relaxed. I am ready to go. I'm
I
probably
can't believe you don't want to short
overexcited.
today. I just can't. I'm it almost makes me not want to trade today. The fact that you don't want to short right
I didn't say I don't listen. In full disclosure, I'm shorting spreads, but I want to be more aggressive and get more to the outright. But to be honest with you, the market doesn't come in here. It's not. It's a wild market, and today
now.
they're going to rotate into Dow and sell Nasdaq or some crazy thing.
No,
And
there's something.
you
Look,
know
if you don't want to short, I'm not doing anything today.
why? I'm not saying I don't want to short. I am going to short. I'm short. Okay. I'm short spread. I keep saying I'm short spreads that are higher than the market for tomorrow, but I want to get more aggressive. But I'm not going to get more aggressive until I see a little kink in the armor. I want to see, I just want to see a little kink in the armor, and then we'll make moves that are necessary. But right now, I mean, come on. Since I've walked in, the S&P had a sell-off off the high at about 7 in the morning, 7:15, and we've been sitting here plus or minus 5 handles for the last hour and a half. I mean, that it's a little ridiculous. So,
Yeah,
we're queued for the opening right now, and we're going to see how everything plays out. The day hasn't even begun, so we're chilling. I'm very focused today.
Bitcoin's
Obviously, I told
playing.
everybody about the new product that you can watch the webinar at 2 o'clock. You can hear all about my new product, and I'm excited, but I don't know. What's making you so excited right now? Like I'm trying to understand. The S&P's up 40.
Not excited, but I'm looking for the
You're
fade.
almost
I am.
excited. You're not excited, but you're almost excited.
I can be excited because I don't see you excited, and you love shorting. All of a sudden, you don't want to short, and I'm like,
But the
and I
funniest
don't
thing
want
is,
to.
I keep telling you I'm short. Like, what do you want me to do? Jump up and down? I mean, they're up 41 handles. I'm not. I'm
But
not
you're
celebrating.
aggressive.
Why would I? I'm celebrating.
Now
Last
the market's
Friday,
higher, and I don't see that aggression. It makes me like, okay, maybe I don't know.
last Friday, we celebrated with a birthday cake. We actually bought the market a birthday cake because it had its first 1% down day. Okay, so why am I getting excited? Like, what's getting you so excited right now to short? Like, I'm short. I'm short spreads, but what's so exciting?
Other than good earnings from Datadog, which I understand why it would uh, create good sentiment in the market, but the market was up way before these earnings reports all night long on headlines, and I just see these headlines get reverted all the time, whether they're positive or negative. It's just it always to me
Dude,
says
you're literally, we got to get close to closing the podcast because we're only 10 minutes from the opening, and I'm glad we had a good one today because you're making me laugh. You're excited. You're Johnny the Bull.
excited.
You're
I was.
literally, your nickname is
Well, the
Johnny the
excitement
Bull
now.
Gravano. You're Johnny the Bull. Okay, that's your thing. The Nasdaq was up 400 points yesterday and 200 today, and you're all excited about shorting. I, okay, I'm not saying you're not right, but I'm not that excited. Okay, when the market's up 600 Nasdaq points in 2 days, so I do think the market is topping. Okay, but I'm respecting it. And I don't think you're gonna like walk in here and just see a 50 handle
I'm
reversal.
shutting it down today. I'm shutting it down today.
Dude, you were shutting it down yesterday. I had to bring you back. You were going to like a baseball coach show at 3 o'clock. I don't know. I'm like, dude, you got to sit in front of this. You just don't know, you know. And then all of a sudden, they had the Trump fake headline, which was just, as he would say, big and beautiful. He's like, I don't know. You know what it is? He could shake the algo because the algo is not a person. Like I looked at that right away. I didn't make one sale of anything because I'm looking at him like, I know he's putting 100% tariff on chips. Okay, sure he is. The guy can't put tariffs on anything. So it was a head fake, but the algos read that headline and react. So those guys got hit. That creates the short base. That gets us up 40 handles, and that gets us to where we are right now. So anyway, again, I am short in full disclosure, out of the money call spreads for tomorrow. If the market comes in a little bit here, just 20 handles, which is not a lot, I will aggressively get short. Okay. But until that happens, I'm going to read a comic book or something. And I think we covered everything today. I hope everybody has a great trading day. I hope that we sell off. Not, I'd like to see them get a little bit weak before I get excited. I'm not breaking out the birthday cake. The market will get a birthday cake on the first 3% down day. We will present the market on air with a birthday cake and celebrate it. Anyway, peace, everyone. Have a great trading day. We're back to, actually, we're not back tomorrow. Tomorrow is my Ask Me Anything. So you can write in to feedback at the Opportunistic Trader. And I will try to get to everyone's questions and answer everyone's questions, as well as during that show, we give a market recap of all our trades that we've done for the week and the market action. And hopefully I have a lot to talk about if the market sells off. Otherwise, trend is intact. So I hope to see everyone there tomorrow. And Eric, enjoy, and I'll talk to you later. Peace, everyone.